Okay, right, we're going to work through chapter 8 then, which is your budgeting processes. So it's quite a long chapter, hence me scheduling a little bit longer for it. So by the end of this session, you'll be able to carry out your calculations for key parts of the budgetary process. We'll look at the various functional budgets to your cash budgets, and then be able to discuss the importance of your cash budgets and actions to take regarding the cash position. And we have got questions to work through along the way. So I've scheduled 2 hours for this chapter. Like I said, it is quite a big one. Okay, so just as an overview then, focus is on your budgeting processes. So building on what we've done to this point, we will be having a look at a full budget example and all the workings behind it, and also a comprehensive cash budget example as well. Okay, so that should all hopefully help. We'll look at the format of a cash budget and then the importance of a cash budget. Okay, so starting off then with your functional budget. So for most businesses, as we saw last week, your usual starting point is your sales budget. So how many units are they planning to make to sell? You know, what do they think that they can sell? So based on that, you are then going to come up with your production budget. And in your production budget, we'll be looking at your raw materials, your labour, and your factory overheads to then get you to a cost of goods sold budget. Okay, so that's assuming that your principal budget factor, like I said, is the sales budget up there. That's usually your starting point for a lot of businesses. Okay, now your sales budget is going to be calculated as your sales volume multiplied by your selling price. Okay, so obviously that's based on forecast figures. So it is a budget based on what you are expecting to happen in the future. So it's a bit of a guesstimate, as I would call it. Okay, so let's have a look first of all at example 1. So what we need to do for this is to calculate your sales revenue for April using our budgeted unit data. Okay, so we have got our total sales revenue here. Okay, and what we are planning to sell for the year. So your starting point is to work out what your budgeted selling price is going to be per unit based on that. So what do we think? What do we think there? So running those figures, some workings in while you debate what to do with it. So how much is our budgeted amount? Yeah, good. So you are taking your budget for your sales revenue. Yep, take your budget for your sales revenue. Okay, and you are going to divide it into your budgeted units that you're planning to sell. That gets you £6 per unit. So then when we need to work out what our sales revenue for April will be, fairly straightforward, because we've got the units that we are planning to sell in April here. Okay, and it's based on your sales. So what would your sales revenue be? What do we think there? Yeah. Afternoon, a couple of more of you joined. Yeah, good. Yes. So it would be 109,980. Yes. So you're just taking your £6 that you've worked out there, multiplying it by the units you're planning to sell in April, which is there. So yes, your answer for that, therefore, if we pop that in there, 109, just say 980. Yeah, good. Okay, so fairly straightforward. So don't overcomplicate questions like that, because you just run with the figures that you're given. Okay, then moving on now, your production budgets and your inventory adjustments. So we need to think about, obviously, if you've got an increase in inventory during that period, then it means that you've got more going in than going out. Okay, if you're thinking about your inventory levels, if you've got a decrease, then you've got less input than output. and we should be happy working these figures out. So your budgeted production is going to be based on your forecast sales plus what you need for closing inventory minus the opening inventory that you've already got. So when we're thinking about how many units do we need to make, you're thinking about, well, what units are we going to sell? Might be 100,000 units, for example. What do we need at the end of that period, closing inventory wise, to roll forward? But then you're going to be starting with some opening inventory. So you've already got that. So we need to be able to work out our budgeted production. So for example 2, we have got a business then that operates a 20-day period. They've got budgeted sales of 3,500 units and 3,600 units of product Y for period 1 and 2. Okay, so period 1, 3,500, period 2, 3,600. The inventory at the start of period 1 is 1,050, so that's what we're starting with. And then we're told that the production manager has decided to start holding inventory equivalent to just 5 days of sales volume of the next period. So for this task, we need to work out then the closing inventory at the end of period 1 will be how many units, and the production volume will be how many units. Have a think. I'm not going to put you on the spot too much with it. Obviously, it is new. Have a think about this. I'm just going to doodle out the answers, but I'm going to freeze my screen so you can't see what I'm up to. Have a think, see if you can work out what the answers would be. Okay, so I shall leave. I'm not going to pause the recording because it's not going to take you long to do this one. So see if you can work out the answers for this. So we need to first of all work out your closing inventory for period 1. So it's based on, let's have a look. So closing inventory at period 1 will be how many units? So that's going to be based on 5 days volume of the next period. So your next period is your 3,600. So that's going to be based on that. And then we need to think about our production volume. Play around with the figures, see if you can get an answer. If you can't, don't worry. That's what I'll put the workings on in a second. We'll have a look at them. So what do we need closing inventory wise, and how many units do we need to produce? Let me know in chat if you get an answer. If you do, I'll be impressed. Let's see if we all agree. Yeah. That's in the actual table. It's one of those, it's like once you know how to approach it, they're actually fairly straightforward. Let's have a look at what you put in. Yeah, good. Yeah, no, that's good. That's good. Well, I'll get you to have a go rather than me just saying, here's the answer. So, yeah, a few of you said in chat 900 units. So your closing inventory at the end of period 1 needs to be based on 5 days sales volume. There's 20 days in a period. For the end of the next period, I'll rephrase that, it's based on the next period's sales figure, which is 3,600. So you take your 3,600 units for period 2, divide it into 20 days, multiply it by 5 days. So that will get you your 900 units. So that's what we need at the end of unit at the end of period 1. Okay, so once you've got your closing inventory, you can then work out your production sales, production volume. So your sales, we are in period 1. Remember, this is period 1 figure. So we are planning to sell 3,500 units. We have just worked out, so that's that bit. We've just worked out that we need closing inventory of 900 units but you are starting period 1 with 1,050. So you can deduct 1,050. I've got a space in that, it doesn't look quite right. That's better, typed it up. So you deduct your opening inventory. So what are you planning to sell unit wise? Add on the closing inventory that you need, deduct the opening inventory that you're starting with. So we need to produce 3,350 units. Okay, are we happy with that? Does that make sense now I've gone through the workings? Yeah. Yeah, we were good. Okay, we will continue then. So that's thinking about our production volume. So how many units do we need to make? We also need to be happy with our materials and working out what materials we are going to require for our production plan. So you will be given the usage per unit. I suppose you might have to work it out, depends on the question. You might be told what it uses each unit, or you might need to do the calculations, but you will know what units we're going to produce. Okay, so questions can be slightly different, but you'll be able to work out either or. So what you're going to need for your production plans is going to be how many kilograms each unit requires times by the units that you've just stated you're going to produce. So when we're thinking then about calculating your material cost budget for April, okay, so we're thinking about our material cost for this one. We need to work out, so again, this is all budget figures. We are working out, so our material used budget is your 460,000. This is going to be based on what you're planning to produce, so be careful you pick the right figures up. Okay, so your material used, you're planning to produce 230,000 units. So what will be your budgeted cost per unit? What do you think? So what's your budgeted cost per unit based on that? Yeah, it's going to be £2, isn't it? Yeah, it's going to be £2 per unit. Good. Yeah, £2 per unit. You're literally taking your total cost, divide it into what you're planning to produce. So yeah, £2 per unit. So when we are then going to work out what our budget is going to be for April, what amount, I'm not going to help you too much with this one, what amount would you get for your budget for April? What do we think? Yes, good. So you haven't gone off on a tangent and used the wrong figures. So it's going to be £2 and it's going to be times by what you're planning to produce. So yes, so 36,000 is going to go into there. Yeah. So it's based on what you are producing, because that's what you need to purchase. So yeah, your £2 times by 18,000 units gets you 36,000. Good. Okay, didn't see any wrong answers coming in for that one. Now, next then, linking on to this is our inventory adjustment for our materials. So we've looked at the cost of our materials. We now need to think about how many kilograms we actually need to purchase. So what do we need to purchase? So for your materials purchases budget, you are going to take your forecast material usage. You are going to add on the closing inventory that you need, and you will deduct the opening inventory because you're starting with that. Okay, so let's have a look at example 4. So we are told raw material usage is 6 kilograms per unit of finished product. Our inventory, opening inventory is 1,000 kilograms. And we expect new inventory procedures to reduce this by half during the month. Okay, so we're halving our inventory. So your closing inventory is going to be half of your 1,000, isn't it? We're then told January sales are expected to be 2,000 units. We've got opening inventory 200 units, closing inventory 500 units. So we need to work out our budgeted raw material usage. So how many kilograms do we actually need for our planned production? Well, your sales. We've got our sales for this one. So we're planning to sell 2,000 units. And then what do we need to purchase? Because we've already got some materials in stock, haven't we? And we're going to need some closing inventory. So have a go, see if you can work out what you're going to use and then what the purchase amount is going to be in kilograms. Okay, so I'll pause the recording just while you have a go at this one. Yes, you're doing well with that one. Let me resume my screen sharing. There we go. So yes, bit of a problem solving task, but like I was saying while on pause, it is logical, isn't it? It's a logical working. Your production then, we are planning to sell 2,000 units. We need closing inventory of 500 units. Okay, so you're planning to sell 2,000. We need to add in 500 units closing in units for your inventory, but we've got 200 units that we're starting with, so we can deduct that. So your production therefore is 2,300. We know it's 6 kilograms per unit, so we need to use in total, well, we need for our production plan 13,800 kilograms. Then you think, well, okay, what do we need to purchase? Well, we need 13,800. That's what we're going to use in production. We have, let's have a look. We've already got 1,000 kilograms at the start, so we can deduct that. And then your closing inventory is going to be half of that, so your 500. So what you're going to use, add on your kilograms for your closing inventory, deduct your 1,000 kilograms that you're starting with. So yes, we need to purchase 13,300. Okay, are we happy with that? Does that bit make sense? Yeah, good. Loads of examples in this one, to be fair, but it's all good practice. Okay, now linking onto this, it might be then that part of our inputs is going to get wasted for whatever reason. It could be evaporation, whatever. So it might be that part of it gets wasted or fails quality control. So they are going to have a sort of percentage in this scenario as to what they would expect to be wasted. Okay, now for example 5, if we have a look at this one, so we've got the quarterly production requirements for product ping. We're told 10% of production fails the quality checks and must be scrapped. So how many items of ping must be manufactured in order to allow for waste? So if we take month 1, I should run the first one. If we take month 1, what we're basically saying is that we need to allow for the 10% wastage. So let's put our figure in there. We need to allow for that 10% wastage. So you don't just times your 72,000 by 10%. That's wrong. Okay, so what we're basically saying is that the 72,000 represents 90%. Okay, that represents 90% of your production. Your manufactured units is obviously going to be 100%, 10% of which is wasted, and that's why we're doing it that way. So based on that, what do we need to manufacture for month 2? What do you think? So what we're going to have to do for month 2? So we've got required units, 90,000. Remember, that represents 90%. So yeah, yes, 100,000 for that one. Workings on screen. So yeah, take your 90,000 divided by 0.9. And then you are getting your answer for your manufactured units, because we need to obviously allow for that 10% wastage. Good. What about then for month 3? So you've got 81,000 required units there. What do we think for that one? Let's put workings up. Yep, good. Yeah, 90,000, good. So 81,000 divided into 0.9 gets you 90,000. So like I said, that is why we're doing it that way. You don't just times the required units by 10%. That will be incorrect. Your required units represent 90% of your production. Your manufactured units represent 100%. Okay, so try and remember that. Now, example 6, moving on. Didn't see any wrong answers coming in, which was a good sign. Example 6, moving on then. This one's a little bit trickier, and sometimes students can think, whoa, where to start with this? So we will do exam technique and we will get the easy marks in first of all. So what we've got to do is to complete our production forecast for product F. Do not show decimals, so round figures only. And they want to round decimal figures to the nearest whole number of units. Okay. Now, we're told closing inventory should be 15% of the following week's sales volume. So I think, right, I am going to get my ruler so I can follow what I'm doing here. I am going to get the easy marks first of all, because they are easy marks, aren't they? So closing inventory, what we need here is going to be 15% of the following week's sales volume. So just to do the first one as illustration, you're going to take your 12,400 times it by 15%. What does that get you? 1,860. So we are then going to put our closing inventory there as 1,860. Okay, because it's based on 15% of the following week's sales volume. And then that figure, we know closing inventory then becomes the opening inventory, doesn't it? So whatever you've got closing, it's then going to roll forward. Okay, so like I said, this is exam technique. Easy marks first of all. Then for our week 3, we've got 12,000. So 12,000 at 15% means that we need 1,800 closing inventory at the end of week 2. That's then going to come forward. So you can see what I'm doing here. These are really, while you might think this is a tricky question, I'm getting some really easy marks here for not actually doing that much. Then for week 4, 11,500 times it by 15%, you're at 1,725. For your closing inventory, bring that forward because we know that's going to be your opening. Okay, so again, move that forward. And then the last one, which I can't see because my chat box is blocking. There we go. 11,200 at 15% means that you need closing inventory there of 1,680. So straightforward marks to bag before we do the trickier bit. Okay, now once we've done that, we can work out. Okay, so for your week 1, your saleable production then, so you've got your sales volume is your 12,200. Let me just do some notes just to go with this. So we'll run it for the 1. So you've got your sales volume, 12,200. Okay, I would typically add on closing inventory first. It doesn't really matter which way you do it. 1,860. And we're starting off with 1,750. Okay, so that gets you 12,310. So what I've done there, I've picked up my sales volume there. I have added in my closing inventory. I have deducted my opening inventory. So saleable production, therefore, is going to be 12,310. Okay, so your sales volume plus closing inventory minus your opening gets you your saleable production. So what would you therefore get for week 2, 3, and 4? What would we get for week 2, 3, and 4? So running with the week 2 figures. So do week 2 first. We'll just check that. Yep. Good. Yep. So 12,340. So sales volume plus closing inventory minus opening inventory gets you 12,340. Good. What about for week 3? What would we get there? You've bounced ahead with all those. Yep, good. Yep, that one's going to be 11,925. So yep, your sales volume plus closing minus opening. Yep. And then last of all, week 4. Yep. So 11,455. So you've got your sales volume, 11,500. Add on closing inventory, 1680, minus opening inventory, 1725. That gets you 11,455. Yeah, good. Okay then. Now we've done the easier bit, we've got to then factor in that 15%, let's have a look, 10%, let's move my chat box again. 10%, so the next sentence, 10% of all production fails quality control checks. So our saleable production, this is what we are going to be wanting to sell. So that is going to represent what percentage? So what percentage does that represent? So your saleable production line. Think back to what we did before. Yeah, so that represents 90%, doesn't it? So that's your 90% there. That represents 90. Yeah, good. So we need to work out this line here, what we need to manufacture. So approaching it in the same way as what we did for example 5, what will you get for your answer there? Pause sharing and I shall type out some workings. So what do we think? Yeah. We're all saying the same, aren't we? Look. Good. Yeah. So 13,678. Good. So you're taking your saleable production, which represents 90%, divide it into 0.9, and then you're basically getting that up to 100%, aren't you? So 13,678 is what you need to manufacture. And then you just do the difference between these two. Okay, don't worry about any fancy calculations, purely the difference between the two figures. So your difference between them is 1368. You can just do the difference there. Okay, so that is your difference that is going to get rejected. So 1368 there. Okay, are we happy with that one? Yep. So get down to your saleable production, divide it into 0.9. That will get you your total manufactured units, and then just work out the difference between the two. Good. What about week 2 total manufactured units then? I'll put the workings on for this. So I think once we've done, round it up. Be careful with your rounding. There's a rounding issue with this one. Can't make part of a unit anyway. You can't have part of a unit. If you can't sell half a unit. That's the way to think about it. Okay. So yeah, so round it up. What's it come out to? Let's have a nosy. So you 12340 divided by 0.9, 13711. You would round it up because what they said, round to the nearest whole number. Yeah, you need to round it up because you can't. If we need to sell, if we need to sell 12,340 units, that's what we need for our selling purposes. Once you've got your rejected, if you only manufactured 13,711, you're going to be 1 unit short because you've got to have a full unit to be able to sell. So yeah, always follow the rounding sort of requirements of the task. But for a unit, if you need it to sell, if you need 100 units to sell, and you round it down, you've only got 99 units, you're then one short. So that's a way to think about it. Yeah. Okay, what about week 3 and 4 then? So run the figures for these. Same approach. I'll put the answers in. Hopefully you'll be okay with these as well. What do we get for our manufactured units for week 3 and 4? So look at what we put in. Yeah, good. Good. So everyone else has put in. Yeah. Coming through correct. Brilliant. Yeah, good. Okay, so yes, so same approach there. Yeah, so for week 3, saleable production divided by 0.9, we get you your 13,250. Yep. And then week 4, saleable production, G11,455 divided into 0.9, we get you total manufactured units of 12,728. And like I said, we're then just looking at the difference between these two, which is going to be your answer there. Okay. All right, are we okay with that one? Any questions at all? Happy with that? Yeah, we were good. Right, on we go then. More questions. More questions to test you. Now, example 7 is looking at calculating material purchases. So what are we up to? 4,000 items of product are going to be manufactured. Each unit requires 9 litres of raw material. 10% is going to be wasted. You've got opening inventory, 7,600 litres, closing inventory, 6,800 litres. So first of all, we're being asked how many litres will be used in production. And they want us to round to the nearest whole number if necessary. Don't think there is any rounding issue with this one. So what do we need for our production? Okay, so how many litres are going to be used in production first of all? So we are planning to make 4,000 items. So we're going to be making 4,000 items, aren't we? So start putting your answers in. 4,000 items. And it takes 9 litres, doesn't it? Yep, so we need 36,000 litres. So 36,000 litres is what we need for production, but then we need to think about the wastage. So how many litres are we going to need? So we're using 36,000. I get, granted the wording on this is not brilliant. So yes, we're actually going to use 36,000 litres, but we need to allow for that wastage. So going into that process, yeah. So going into that process, we then need to take your 36,000, divide it by 0.9, just 10%, isn't it? Yes. Okay, so what we actually need to push into that process for the production is going to be 40,000 litres because 10% of that is going to be wasted. Yeah. So we need 40,000 litres. We've established that. Okay, and now what we're being asked is how many litres must be purchased. So what do we need to purchase? So again, round figures only, but I don't think there's no rounding issues again with this. So what do we need to purchase? I should type the answers in as you're sending them in. What have we got there? That's that. Can't spell, but you can't see what I'm doing, so that's fine. Okay, what do we get for our answer? Let's have a look at what you put in. Yeah, good. I think I've typed all that in right. So yes, we need 40,000 for production. Closing inventory, we need 6,800 litres. Opening, we've already got 7,600, so we can deduct that. So we need to therefore purchase 39,200 litres. Okay, you're getting well with these. All right, again, didn't see any wrong answers coming in. Okay, moving on then, and all of this is going to be hitting a massive example, as you can imagine, very shortly. These are all little bits that we're working out to then be able to put together a bigger working schedule. Now, your labour budgets, you are also going to need to be able to prepare budgets for candidates. Students must be able to prepare budgets for labour, employees and other resources. Okay, now your basic time hourly rate is going to be needed to calculate your basic labour cost in a working schedule. You may also have overtime hours in here as well, which are likely to be at a premium, which we're taking you right back to your level 2 studies and your PCTN unit for that one. Now, for example 8, super easy. Overtime could be paid at time and a half, so that's 50% more than your basic rate, and your overall working schedule presented is as follows. So we're told our basic time is £12 per hour. Your overtime could be paid, I'm assuming it is going to be paid, overtime 400 hours at your basic plus, so it's time and a half, isn't it, for that one? So what will your total basic hours be for the basic cost for the first line? So your basic time, £12 per hour. You got 1,600 hours. Yeah, it really is that easy. So some of these workings will be super easy. Yeah. So just simply times it. Yeah. So £12 per hour at your 1,600, so 19,200. Then you've got your overtime. So what's your overtime? So we know overtime is going to be at 12, isn't it? And it's at time and a half. Yeah. So that's going to get you 7,200. Good. Okay. And then your total. What's your total? Good. Yeah. 26,400. Brilliant. There we go. So fairly straightforward working, I think. I think that's, there are nice, easy bits to work out. And then there's bits that you think, oh, how do I do that? Okay, bit more question practice then. Let's have a look at example 9. Now, this one is about calculating overtime hours. So we are producing 3,280 units. Each unit takes 45 minutes to produce. We're told 12 staff work 180-hour basic hours. So you've got 12 staff at 180 in total. So what we're being asked is how many overtime hours must be worked to complete the production. So have a go and we'll have a look at the workings in a second. I should put the answers on for this one. Saves me typing it all out. Get those ready in the background once you've got an answer. Again, a bit of a problem-solving task. So we need to work out how many hours we need for our production in total. So you've got 3,280 items, 45 minutes each. So convert that into hours, then compare it to the hours that you've got available. And then you've got your difference, which is how many overtime hours are going to be needed. So how many overtime hours must be worked? Yep, so we're going through the steps. So you're working out, good. You're working out how many hours we need in total, how many hours we've got, and then from that, what are we short? Yeah, excellent. Yeah, 300 hours. Brilliant. So if you're not too sure and you're watching the recording back, we need to go through the steps. So I typically would start off with what we need. So your 3,280 items, I'd times it by 45 minutes divided by 60. Don't matter how you get there. And that's 2,460 hours that you need. So I'd start with that. How many hours do we actually need? What have we got? 12 staff at 180 hours. So we've got 160. And then look at the difference between the two. You're 300 hours short, aren't you? So yes, 300 hours of overtime there. Okay, good. All the correct answers again. You're getting on well with this unit. It's like I say, it's a bit of a tough unit and you're getting on really well. Okay, example 10 then. Let's have a look at another one. So this is about calculating what are we going to subcontract. Okay, now 6,000 items are to be manufactured in July. Each one takes 20 minutes to produce. We've got 1,700 hours available. Any additional requirement needs to be subcontracted. So we need to work out the units that we need to subcontract. So we need to think, how many hours have we got available? Okay, what hours there's different ways of approaching this again. What hours do we need for our production of 6,000 items? Think about the difference there, and from that you can work back to work out how many items you need to then subcontract. Okay, so have a go. Let me know in chat what you get for your answer. And again, I shall put the workings on once you've done that. Put your answers on for you. So again, a bit of a problem-solving task. Compare the hours that you've got available. How many hours does it take to make all of these items? Your difference of hours then, and you can work out from that the items that you need to subcontract because you can't make them because you're short of hours. Let me know in chat once you've got an answer. Okay, good. Yes, so we need to subcontract 900 units. Yeah, let's have a look at the workings. So the number of hours available are 1,700. For our production level of 6,000 items, then at 20 minutes each, we would need 2,000 hours. We are therefore 300 hours short. So for that, you need to subcontract those units out. So in 300 hours, you can make 900 units, can't you? Because they take 20 minutes to make. Okay, different ways of working it. Do 300 divided by 20 times by 60, or 300 times 60 divided by 20. You're still going to get your 900 units. So yes, so you need to subcontract out 900 units for that one. Okay, any questions to that point? Are we okay with that? Yeah, real good. Right, we will continue then. On we go. Let's have a look next at example 11. Now our options, let's not put the answers on. Our options, let's switch back to student version, might help. Our options are here, not giving you the answers. So you would have, for your exam, you would have drop-down options there to select. So you're not just going to have a list like that. You'd have drop-down options to select. So we need to state which budget should be used to take into account of each of the following anticipated situations. So which budget are we going to go for? Let's make this easier. Let's give them some numbers. So production budget, raw materials budget can be 2. Raw material utilisation can be 3. Direct labour utilisation can be 4. Makes life easier with you answering in chat. Okay, so for the first situation, a reduction in finished goods inventory. Which one do you think that would impact? What would you go for? If you're looking at making a reduction in your finished goods inventory, yeah, that's going to be in your production budget, isn't it? Yeah. When we're thinking about how many units, yeah, how many units do we need? That's your production budget. Good. The next one then, deterioration of raw materials whilst in storage. So which one would that impact on? Yeah, it's going to be your raw material purchases, isn't it? Because we're going to need to buy more. Yeah, good. Yeah. Next one then, rejection of finished goods at final inspection. So think back to what we've done before with the previous examples. Which budget would this one go into? If we know, say, 10% is going to get rejected. Yeah, it's going to be that first one, isn't it? That's going to be in your production budget because you've got to allow for that. You need to budget for that 10%. If it's 10% rejection, so you're making more to allow for that. Next one then, spillage of raw materials during production. So what do you think that would be? Yep. Good. Have a look at where we put it. Yep. That's your utilisation budget for your raw materials. Yes, how you're utilising or not the raw materials. Next one then, direct labour working at 80% standard efficiency level in words out. So they're working at 80% efficiency level. Yeah, good. That's going to be the fourth one, isn't it? So direct labour utilisation. Again, it's not very good, is it? Want them at 100%. And then the next one, we've got increased demand for finished goods. So we've got more demand. Yeah, that needs to be in your production budget. Because obviously you're thinking about your sales demand, aren't you? So we've got more demand from our sales. Therefore, that hits your production budget because you need to make more units. And then the last one, increase in raw material inventory. So we've decided we're going to keep more in stock. Yeah, that's going to be your raw material purchases. Yeah, because we need to be buying more if you're going to keep more in stock. Yeah, good. Okay, so again, no errors coming in with your answers there. Now, last bit we've got then just on your overheads for this section anyway. So your variable overheads are going to vary alongside your labour costs. Okay, because your variable overheads will be recovered on your total labour hours. Can't speak. Fixed overheads we know do not vary with output. Okay, now your fixed overheads will be given to you in a working schedule. And on we go to our working schedules. Now your master budget, what we're going to have going into this. So you've got your cost of goods sold budget, you're going to have your selling and distribution expenses budget, and your general and your admin expenses budget. All of these will pile into a master budget. You might also have capital expenditure lurking. And from all of this, you can then put together a budgeted SPL, budgeted SFP, your cash budget as well. Okay, so your master budget is your overall budget where all of these other budgets that we've done are all consolidated. Okay, so it will usually show as a budgeted, old terminology there, it will show as a budgeted statement of profit and loss, statement of financial position. Let me just flag that. Kaplan are loving me at the moment, the amount of things I keep flagging with them. I know I've missed that one before. Old terminology that you won't see for AAT now. Right, I should put myself a note. Right, so yes, your budgeted SPL and your SFP. As we work through then, you've got your test your understanding questions, where they're marked as extension. They're going to be a little bit trickier than what we'd expect to get in your exam, but good practice nonetheless. I'll highlight that so I know what I mean there. Okay, now let's have a look at example 12, and I'm going to work through this one on screen. You will be pleased to know. Now, what you have got on the next few pages, is my page numbers matching this? No, because I've got a slightly different version. What we have got on, not this page or the next one, the one after, you've got all of your workings to go with this. Okay, so I'm just mentioning that. Let's scroll down to show you what I mean. So you've got all of your workings here, okay, which I'm about to go through. So don't worry about frantically writing it down. We've got it all there. So I'm going to work through this one. Now, in your exam kit that you've got for level 4, there are 2 questions that are quite similar to this, Washington and Adams, I think it might be. So they are worth having a go at. Okay, I can't remember what exam kit question numbers they are. I've actually got a note of any exam kit questions at the back of all of this, possibly not, but it'll be for this chapter anyway. Exam kits shown as 20 to 44, 52 to 57. So I'll leave that on screen as we get to the end. But Washington, and I think it's Adams, 2 very similar questions. So my advice would be to do one of those once you have done this chapter with me, because I think it'd be good practice. Do the Washington one, that's definitely still there. So what we need to do, otherwise if you leave it to a revision, you'll have forgotten what to have done at that point. We have got 3 working schedules that we need to complete. We've got our production budget and notes below. Let's make this a little bit bigger. And all figures need to be entered as positive value. So we're not going to go putting any negatives in. Now, the first one that we're going to do is your materials. This is the hardest one. Okay, this by far is the hardest one to do. So there's still easy marks to be had in the other sections, and there's still bits that you can get in here that are quite easy. So you've got your materials that we need to do. We've then got labour, which is super easy. And we've got our production overhead. And you can see we've got all information running down the side, linking onto all of this. So we need to just pull it all together. Now, we need to go through this in some steps. Let's do this in pink. I've actually wrote out this in pink, so we'll do it in pink. It gets boring just using blue all the time. So we are going to do, this is my approach anyway, we are going to deal with what materials we've used first of all. We're sort of working backwards and upside down and sideways and everything else on this. Then we're going to work out our purchases. Okay, we're going to do it in that order. And this figure over here, you do last. Okay, so we do that one last. So I should do that in a different colour just to show the importance of this pen. Now I should go back to blue. So we need to first of all work out what we're going to use in our production. We've got our production budget. I haven't gone mad. I've been teaching this for far too long. In fact, as one of our guys reminded me, was it yesterday? 20 years now. 20 years I've been teaching AAT. So you have to liven it up with a bit of different colour now and again. So what we've used in our materials then, we go to our production budget. I feel old saying 20 years. Let's not think about that. So in our production, we have made, what we're going to be making 16,000 units. That is our planned production. So you think, okay, what we're going to be using, we need 16,000. That's our units going to go in there. Okay, so we're going to be producing 16,000 units. I think, fine, where's the rest of my information? How many kilograms? Because we've got kilograms we need to do before we get to the price. How many kilograms does each unit take? So off I go. I nosy in my materials section here. Each unit produced requires 2.1 kilograms of material. So back to my workings. I go times that by 2.1 kilograms. And that means that I am going to be using 33,600 for my planned production of 16,000 units. And be careful, you don't go picking up your sales figure. This is our production. We are going to be using 2.1 kilograms per unit, 16,000 units in production. That's what we're going to be using. Okay. Now, we then need to think about our purchases, which is our step 2. So for our purchases, let's put some workings here. So for your purchases, we need 33,600. We've just said that. We need closing inventory, which seems very bizarre, 35,000, seems super high. And you've got opening inventory of 2,200. So we're doing the same workings there as what we've done on the smaller schedules we've done before. So what we're using in production, 33,600 kilograms. We have got our closing inventory that we need to add on, 35,000. Yes, it looks a bit unreasonable there, but we're running with the figures. You start with opening inventory of 2,200. They must be thinking there's going to be a massive shortage of whatever this material is. That's all I'd say. So I think we'd agree at that point that we need to purchase 66,400. So in our purchases box, we put 66,400. Now, we're told the purchases are at £1.50. So your 66,400 at £1.50 means that your spend there is 99,600. Okay, and we can add that down. So let's put our opening. So what we're going to do there, opening plus your purchases, your subtotal at that point. We're getting the easy marks in here. You can see what I'm up to. Exam technique. Get my easy marks in first of all. Let's tidy that up a bit. There we go. So our subtotal is 102,680. We can do the same with our kilograms. So 2,200 opening plus purchases gets you a subtotal of 68,600. Okay, so I've got the easy marks in to that point. What else do we need to do then? So we need to work out our last figure, our closing inventory. So our closing inventory figure, we have got 35,000. We are told, I'm just scanning for the notes, closing inventory is to be valued at budgeted purchase price. So our closing inventory is to be valued at the budgeted purchase price. So that's £1.50. So your closing inventory, therefore, is your 35,000 at £1.50. That gets you 52,500. You can see we're sort of piecing it together, grabbing all of these bits of information. Okay. Now, once we have done all of that, we can then come back to our last figure. So we have got our subtotal of 102,680 less the value of your closing inventory. So what we're doing here, let's just put a note there, 102,680 minus your closing inventory is going to get you 50,180. Okay. Let's put that there. So that is your missing figure. And you can't do that until the end. So yes, we've got really neat workings on the next few pages, but I'm doing it on one page just so you can follow what I'm up to rather than scrolling or flitting from one screen to the other. So just to recap, get the easy marks in first of all. Okay, so the first thing we did was to work out what we're going to use. Our production is 16,000 units that we had from there. We know each unit takes 2.1 kilograms. So let's just make sure I'm going through all these. Let's tick that one off. So we've done that one. And we know it's at £1.50. So your 66,400 at £1.50 gets you 99,600. Okay, we add it down. So your opening plus your purchases equals that line. So we can do both of those. Okay. We know then that we have used 16,000 units at 2.1 kilograms. So we know kilogram wise what we're using in production. Okay, and you've got your closing inventory figure given, and you're told that closing inventory is valued at budgeted purchase price, which is your £1.50. So 35,000 at £1.50 gets you 52,500. And once you've got that, you're just looking at your subtotal value, 102,680, minus your value of that closing inventory. Okay, so that gets you your 50,180. And that is the hardest bit to do. Does that make sense? Like I said, we've got all very neat workings on the next few pages, but I'm trying to do it on there just so you can show how I'm approaching it and in what order. So if you try and just run it that way, it's not going to happen. Are we okay with that? Yeah, good. But an exam technique, get the easy marks in first. Get the easy ones in first. I said, that's definitely the harder bit. But I said, once you've done this, do that Washington question because it's so similar. It'll be good practice. There's probably some in the book. There's probably some in your exam, in your question bank as well. But I know that Washington question in your exam kit's a good one. So you'll be able to find that. I think it's got the names at the start of the index, hasn't it? So you should be able to find it. Now, labour then. So basic times £16 per hour. Okay, so we need to find our information on our labour. Let's have a nosy. Here we go. Labour. Each item takes 6 minutes to produce. Okay, so we need to work out, based on that, how many hours it's going to take us. We are producing, and remember, we're using this figure here. We're producing 16,000 units. Each one takes 6 minutes. So how many hours is that? How many hours is that? Some workings down here. Good. Yeah, excellent. Right, so yes, put the workings there. So we are producing 16,000 units. Each one takes 6 minutes. We need it in hours, so do the maths on that. So yeah, 1,600 hours is what we need in total. We're going to put our total in there because we need to know our total hours. Okay, what have we actually got then? Let's have a nosy down at the rest of the information. 8 staff work 175 hours basic each week. So what hours have we got from a basic then? So what have we got? We've got 8 staff. They're doing 175 hours, aren't they? Yeah, we've got 1,400 hours, and they're your basic. Yeah. So we put our basic hours in there. 1,400 hours, so we can work out the overtime is 200. Don't need a calculator for that. Work out the difference. So your basic hours is £16. So £16 at 1,400 hours gets you 22,400. Overtime. Okay, let's have a look back to our information. Overtime is paid at 25% above basic. So time and a quarter. So we've got 200 hours. How much is our overtime going to be? So in total, what do we do? Yeah. Times in there might help. Yeah. So for your overtime then, 4,000. Yeah. Okay, and once we've done that, we can add it down, 26,400. Okay, so let's link these together. Let's shuffle that. I'll tidy this up a bit. So that's that there. There we go. Yeah. So your 200 hours at your 16 at your 1.25 because you've got 25% above basic. So we have done our labour. Next then, we've got our production overhead, and we're told Variable amount is at £2.60 per labour hour. So we bring down our labour hours. Okay, so we've got a note there. Production overhead recovered on total labour hours. So your total labour hours get moved down here, 1600. 1600 at £2.60. I know you can do the maths. It's 4,160. You got your fixed costs already there, so we add them down, 163, 420. Okay, and we're done. That bit anyway. Does that make sense? Are we okay with that? I said the materials bit's the trickier bit. Yeah. Yeah, it's good fun. It is good fun. And it's remembering what to do. But use this example to help you. You know, do use it to help you, because it'd be good to refer back to when you do that exam kit question, which, like I said, do it sooner rather than later, because it will help you then. And you've still got another one in your book. Like I said, you might have them in the your study text as well. Can't remember, but I know Washington's a good one. Yeah. Right, now we've done that bit. That's part A. And like I said, you've got the workings in a couple of pages' time. The next bit then is to complete our operating budget. And all of these figures need to go in as positive figures. Closing finished inventory will be valued at the budgeted production cost per unit. Okay, now we need to roll up and down pages now. So our sales revenue units, we go back, we go to our production budget, and we now pick up what we're planning to sell. We're planning to sell 15,800 units. So don't go putting your production figure in. This is looking at what you're actually planning to sell, which is 15,800. Okay, so put in your sales units times by 24. That's going to get you 379,200. Okay, so that's your top section done. That's the easy bit done. Then we need to go through and move all of our figures over. So we're now looking at our cost of goods sold section, which we are familiar with, okay, to get you down to your total cost of goods sold, obviously. So all of this should be familiar territory to you. Okay, but we've just got a breakdown here of that section there. So in the simplest format, if you think back to your level 3 studies, opening inventory plus purchases minus closing inventory equals your cost of goods sold, isn't it? Okay, so that in the simplest format, but we are breaking it down into your cost of production between your materials, labour, production overhead. So let's go off and grab the figures one by one. So we need our materials figure. Back we go. Now, what I would say in an exam question, let's highlight these in a different colour. Let's go green. What I would say, I didn't mean to do that. What I would say in an exam question is if you have a wrong figure here, okay, because we are looking at this figure here. If you've got that figure wrong, but then you carry it forward in the correct manner, the system should mark that as correct, because you've already lost a mark on screen now. If you then carry it forward in the correct manner, you're not going to get a double mark deduction. Don't worry. So that materials figure comes forward. That's what we've used. We're working out our cost of production. Okay, so your materials comes forward at 50,180. We then go back and we go and grab our labour figure. So back we go. Highlight these in green. So your labour cost is that 26,400. So that goes into there. And then we've got our production overhead. Back we go. The production overhead is that figure there. Where's my screen gone? 163,420. Didn't like me doing that. And now it's froze. Let me try and move that. Right. Has it froze? Yes, it has froze. We're going to work again? No, it's having a wobble. Give it a second to think about it. So all we're doing at that stage is just moving over all of our totals that we've just worked out. Okay, so 163,420 is going to go into there. So we add those together. Add those together, and that's going to get you your total there. I'm going to break this right down. And they might think I'm being daft doing this, but sometimes, you know, it might not always be clear where these figures are coming from. So we'll break it right down. So your three costs there gets you your total of 240,000. Now, what else do we need to do? We need to work out our closing inventory of finished goods. And there was a note about that, wasn't there? There was a note here. Closing inventory of finished goods is valued at the budgeted production cost per unit. So we think, okay, we have just worked out that our cost of production, let's put yellow back on, our cost of production is 240,000. Okay, so we need to look at how many units, closing inventory finished goods, have we got. We go back. Here we go. Now, this is all for units. Okay, so closing inventory of finished goods, we've got 3,000 units. So we work in between the two pages here. Okay, so we've got 3,000 units. We produced 16,000, didn't we? So we need to work out, because the question's telling us closing finished goods inventory will be valued at the budgeted production cost per unit. So we've produced 16,000 units, we've got left 3,000. We need to work out our closing inventory of finished goods. Where should we do the working? Let's pop it here. So we have got 240,000 costs that we've just worked out. I'm going to divide that into my production of 16,000. I have 3,000 closing units left in my inventory. That therefore gives me a nice round figure of 45,000. And that's how you work it out. So you take your total cost there, 240,000. Okay, your budgeted costs there. Divide it into your production, times it by your closing units that you've got of 3,000. That's going to get your closing inventory of finished goods, which you put in at 45,000 there. Okay, so the cost that you've got at that point, your cost of goods sold, is going to be your 240,000. Okay, so we've got our 240,000. We've got opening inventory up here as well. So move this around. Opening inventory plus your 240,000 minus, don't be putting this in a minus because we're told not to, minus your 45 gets you your cost of goods sold, which comes down to 235, doesn't it? Okay, so your opening inventory plus our costs of production there are 240,000. Deduct your closing figure, you're at 235. Okay, and then you can work out your gross profit or loss. So we're taking our sales revenue there, aren't we? Sales revenue minus your cost of goods sold. That means we are going to end up with a gross profit of 144,200. And that's how we complete our working schedule. Top section anyway. Okay, so it's a closing inventory. If you're going to go wrong, it will be that figure there. So follow the notes that I've just done there. That will help you. And then the last bit's fairly easy. Let's shrink that down. Last bit's easy. You've got your admin, your marketing, add them together, move that across 90,000. Nothing too tricky to do that. And then your gross profit minus your 90,000 means that you've got an operating profit of 54,200. There we go. And we're done. Does that make sense? Has anybody got any questions on that? How did we find it? Typically, students find these tricky. So if you sat there thinking, what has she just gone through? But what I would say, focus, yeah, lots of notes made. Focus on the easy marks, exam technique, get the easy marks in first. And if you think about it, Most of them are straightforward. The only tricky ones really are flagged. Okay, I have flagged them. But just work through it logically. And the good thing about obviously being online, you can watch the recording back as well. If you think, let's listen to a go through that again. So go through those steps, because like I said, your materials working schedule, you have to do it upside down, back to front to sort of put it all together. Yeah, read the question carefully. What I would probably do before I started is just have a nosy at all of these notes running all the way down the side. Think, okay, I've got my notes there, got these, got that, have a quick read through. So I know what's there. And then as I dip into these schedules, you just go back. But yeah, it's very much a case of read the question carefully. Okay, but like I said, I've doodled notes all over those 2 pages, but neatly on the next page, you've got all of the notes to go with it, but it doesn't tell you what stages to sort of work these out. Shrink that down a bit more. So you've got all of the notes to go with your materials. Okay, like I said, we've discussed all of those, so it's showing you there where all the workings are. That's why I flagged that before we started, because they'd be frantically writing it all out, and then I'll show you that. You'd be like, why didn't you tell me that was there? Okay, and then we've got a note there, you've got a little asterisk there, so they're saying the same figure should be left until the end. So that's the one that I said you've got to leave that till the end. Okay, so that's the trickier one. Then you've got your labour. I can make this a bit bigger now. You've got your labour one that we worked through. Okay, and you've got your production overhead as well. But like I said, we've chatted our way through all of those, but you've got the workings there that will hopefully help you as well. So yes, huge example, but like I said, use the Washington question in your exam kit. It will help you. I can't think what page number it's on. I don't think I've got a copy of the exam kit to hand. Let me just have a quick, hang on. See if I've got the exam kit saved. Excuse me a second. Let's have a quick nosy. Got the older version. That might be. Let's have a quick look. I don't think the exam kit's changed. I don't think it's changed much. I thought it got the names on it. Let me just have a quick look, just so I can point you in the right direction. So I want you to do that one. Excuse me. Oh dear, talking too much. Let's have a look. Suspect it's going to be. Oh dear, I'm off. Oh right, have you found it? Hang on a second. Does it match? Have a look. So I'm running on a PDF version, which. Oh, it's page 19. Oh dear. Do you know what? Let me just get a cough sweet. Bear with me a second. Yes, there's a couple of them, isn't there? Let me just have this and I shall. Let's keep mooching. Let's have a look at these. I just think it's one of those that's worth. It's worth you looking at. Yeah, it is. Oh gosh, I'm off. Sometimes these cough tablets make me worse. Right, bear with me. My eyes are watering now. Oh dear. Compose myself. Let's have a look. Right. Let me just jump over. Oh, where's it gone now? It's in Adobe, that's why. So yes, this is previous version. It's an older version, but yes, question 47, Washington. That's the one that's worth having a look at. Hopefully you can see that one okay. She says. Hopefully you can see that one okay. So yes, 47 is the one that I wanted you to have a look at. So very similar to what we have just worked through. And Adams, yeah, that's sad I can remember the names of these two. So just have a go at question 47. That would help, definitely. Right. Let me come back to where we were. Okay, now where's my chat box disappeared to? Right, let's move that back in. So yeah, loads of question practice anyway. So like I said, I know you waited a couple of minutes while I've just been hunting around for that, but I just think it's worth you. It is worth you doing it. So if you get a question on it, there's going to be a lot of big marks there you can have. So definitely worth having a look at. Right, and I've composed myself while I've been hunting for that as well. I'm hoping I'm not getting a cold or something. It's not good. Right then, so we've done that bit. Let's have a look at the last section that is on your cash budgets in your budget creation process. So what we're going to be looking at is putting your cash budget together. So you've got your forecast sales units, you've got your production units, you've got your labour utilisation, you've got your materials usage and your materials purchases. Okay, so all of these are going into your cash budget. Now, depending what version of level 3 you've done, I'll assume that you've all done Q22. We have seen cash budgets at level 3 maths, haven't we? So we've already seen this. Now, well, simplified versions. So why are cash budgets so important? Obviously, from a business point of view, they need to manage and monitor their cash flows, because you can have a business that's making a profit, but they could run out of cash. Okay, so cash is very important that they can meet their short-term obligations as they fall due. So paying employees, paying suppliers, for example. So we're going to be looking at how it all fits together in a minute with a bigger example. Typically, your cash budgets are put together on a month-by-month basis. So you can then, if you know that you're going to have a shortage of cash next month, you can then put things in place to allow for that. So you might set up a bank overdraft or extend a bank overdraft, for example. Or it might be that you've got surplus cash and you think we can use that to invest in something, possibly new non-current assets. So based on all of that, let's have a look at example 13. So we've been asked, oh, I feel sneezing now as well, falling to pieces. Which one of the following actions should management take? So let's have a look at the scenario that we've got here. So what are they up to? They create and sell video games. Part of the planning, decision making and control processes involve producing monthly cash budgets. Latest version then shows that there's going to be a short-term cash deficit at the end of the current month. That's going to be resolved before the end of the current quarter. So in a sensible sort of frame of mind, which option would you go for here? So what actions should management take? Just one. What would you do? So what we're going to do in that scenario, what do we think's best? If you're management, what are you going to do? Good. Yeah, do you all agree? Yeah, would be option A, wouldn't it? Yeah, would be option A. So you are going to arrange an overdraft with the bank because it's a short-term issue. Okay, so that will be the most sensible because it's going to be, you know, resolved by the end of the current quarter. It's only short-term. So the other options wouldn't therefore be suitable. So undertake a significant cash investment as quickly as possible. That doesn't make sense because you're going to have a cash shortage, not surplus. Take out a long-term fixed rate loan. That doesn't make sense either. It's only a short-term problem. Give all staff an immediate cash bonus. That's not going to help the situation either, is it? So yes, you would just arrange an overdraft with the bank. Okay, now last section is on your cash budgets. We've only got example 14 left to go. Looking at the time, we should be okay on time. Like I say, it's a huge chapter, this one. So your format of a cash budget. So what you've got here, just for illustration, okay, layout will be to suit the business. So it is marked as a cash budget, and we've got this for Jan, Feb, March and April. You've got your receipts coming in down to your total receipts line. Then you've got your payments going out to get down to your total payments. And then you've got your cash flow for the month. Okay, so your total receipts 10,000 minus your payments 16,000 means that you've had more going out than coming in. So you've got minus 6,000 there. We are starting January with £10,000 opening balance. So you're going to deduct the 6,000. That means that you've got a balance carried forward of 4,000, which then comes forward here. And so it continues. So that's just a typical format of what a cash budget would look like. But like I said, you've seen this in your level 3 maths. It might have been chapter 9. I'm trying to think back, possibly chapter 9. So, look back at that. That might help you as well. Okay, so that's your cash budget. Now, one aspect that we need to think about when we're putting together a cash budget, we need to think about lagging, don't we? So lagging is the time difference between us making that sale, we're invoicing the sale, and the money actually being received. Or with purchases, us purchasing the materials, getting the invoices in and actually paying them. Okay, so you might also find that your receipts or payments are split in terms of timing. So it might well be that half the customers take 1 month to pay, half take 2 months. So again, you need to think about staggering when the money is coming in. And then for your non-cash items, so we are doing a cash budget. Items that are not cash do not belong on that cash budget. So ask yourself, does it mean that a payment is going in or out of the bank? Okay, or will it? Yeah, so think about it from that point of view. And things like your depreciation is a typical one that you'll see. It's a non-cash expenditure. You do not pay depreciation at your bank. Okay, so we need to be mindful of that. Okay, now your initial purchase of your non-current assets would need to be recorded because that's an outflow of cash, as do other non-operational payments, so like your dividends and tax. So any payments going in or out need to be on your cash budget. Okay, so let's have a look at an example. Is this the example that we've just used? Yes, it is. Yes, I think these are the same figures. Let me just have a quick look back. Sort of. Yeah, this is the same as what we've looked at in example 12, but then the operating budget is different. It is different. So yeah, this bit is exactly the same. So your 3 working schedules that we worked through before, we've got all of these here. So we're familiar with these. And then you've got the operating budget. I think the change here, they've dropped that down. It was 24, I think, before. So the figures are slightly different. A lot of them are still the same, actually, if you're thinking, yes, it does look familiar. So you've got your operating budget then. And we can see from this that we have ended up, for this example, with a loss of 451,800. Okay, that's what happens when they go meddling with the sales price. So you've got an operating loss there of 451,800. So that's just for illustration. Now, what we need to do is to use this as a base for example 14, and we need to complete the complete the cash flow forecast. Computer doesn't want to play today, does it? We need to complete the cash flow forecast using our budget data in that example on the previous page and the additional information below. And they want receipts and payments as positive figures. I think it's working again now. So we told them sales receivables balance is expected to decrease by 56,000 over the year. So we'll come back to that in a second. Our materials payable balance is expected to increase by 26,800. And then we've got our depreciation charge of 19,000. So what I'm going to do for this one, the computer's definitely having a wobble. We will run it with the answers. I'm not going to say have a go at this because it's new. Let me just scroll down and find the answers for this one, and we can bounce between the two then. Where is it? Here we go. Right, so example 14 answers. So we're picking up all of the information here then and allowing for the additional notes. All of the payments are made in the year in which they are incurred. So we need to use the information from here to help us to complete our cash flow forecast. So the first thing that we need to do, we've got our opening cash balance coming forward. We're given that. Your sales receipts then. Now our sales receipts, if we go back, your sales receipts here are showing us 63,200. Computers. Definitely having a wobble. So we've got our 63,200 from the previous page. I'll come back to live computer. And we're told in our scenario, to give it a minute to think about it, that your sales receivables balance is expected to decrease by 56,000 over the year. So that means that our customers are paying us. Okay, so our adjustment, is it working okay or not? Yep, seems to be working. So for your sales receipts, you've got your 63,200. Customers have paid us because you've had a decrease in your receivables, and I'll put the explanatory notes on to go with this in a minute. So we're going to add that together. So we get 119,200 for our sales receipts. Then we look at our payments. Now for our materials, we've got a note there that our balance, our materials payable balance is expected to increase by 26,800. So that means we haven't paid our suppliers by that. So we go back, we get our materials figure. What have we purchased? Again, be careful what you're picking up here. We have purchased, computers, we have purchased 99,600. That's what we've purchased. So we are going to bring that in here. Deduct the movement in our payables. That's going to get you 72,800. Okay, then your labour, we go back. So your labour we have paid is 26,400. So that goes in there. Your production overhead, we're picking that up there, but let's do ourselves a working. So 163,420. What do you think we need to adjust that for? Any ideas? Yeah, it includes 19,000 depreciation. That's not cash. That needs to come out. So strip out the 19,000 depreciation. Good. It's going to get you 144,420. Other overheads then. What else have we got in the mix here? Other overheads is that 280 there. So that needs to come in. So it's piecing it all together. And then we told in the question there, 75,000 capital expenditure. So it's saying to enter receipts and payments as positive figures, but they've put that as a negative. Not too sure why they've done that. I think what would happen in your exam, you would be completing this column here, and the system will then throw that figure out, I suspect. So we'll let them off there. So your sales receipts minus your expenditure will get you down to a closing cash balance of 80,580. Okay, good. So that is it. Piecing it all together, and we've got our notes, which I've jumped over to this one. So just as a note, they'll put the workings on screen. So your sales receipts is not the same as sales revenue, because even if you've made the sale, doesn't mean that you've necessarily received the cash. So you need to look at the movement in your receivables. Okay, receivables have decreased by 56,000 over the year. So as well as getting your cash sales of 63,200, you've also received 56,000 from your receivables, your debtors. For your materials then, so we saw the movement in that. So we picked it up at 99,600 from your working schedule. Not necessarily what you've paid though. So you will look at your payables movement. We're told in the question it's going to increase by 26,800. So that means obviously we're increasing our debt to our payables there. So adjustment for that one. Labour was straightforward, straight from our schedule. And then your depreciation we took out of our production overheads. And then your other overheads, we just picked that up. So your marketing and admin. Okay, so it's piecing it all together. So lots to take in there, I know. It is a difficult chapter. Lots of practice is key for this one. So I shall leave this version on. So I'll put the questions on them. So just to summarise then, we have looked at your budgeting processes, so your functional budgets. We've looked at that comprehensive functional budget example. We've looked at your cash budgets with a full example of that as well. And then the format of your cash budget and the importance. So practice question wise, what you've got to do, you've got 10 test your understanding questions in total. So just go 1 to 10. 10 test your understanding questions in total. Exam kit questions are flagged there. You've got your CAP plan question bank. I've got them marked as questions 30 to 38. They could have shuffled slightly. So they're good practice as well. But like I said, do have a go at that Washington question in your exam kit, which you said was page 19. Yeah, so do have a go at that, because that will help you. Okay, so what we're going to do then next week, we are on chapter 9, which is further aspects of budgeting, and we will be doing that. Let's have a look. Where are we? That is now in a quarter, so a much smaller chapter, and that'll be back to Friday. So apologies for having to shuffle this session today. I think I said to you last week, I've got a dentist appointment Friday afternoon, so I've had to shuffle this session. If it had been an hour session, I could have probably got away with it, but 2 hours, no. No. So hopefully that's been all right anyway. And sorry for having a coughing fit halfway through. But thank you for joining. Enjoy the rest of your day, and I will see you online on Friday next week. But any questions, not a problem. Any questions, ask away, but do that question. Yeah, do that question for me while it's fresh in your mind. Yeah, I always used to do that when I was studying level 4 myself. I would literally, do my homework the same day, just because I've got a really bad memory. So I got the homework done the same day, and then just revisit it before I picked it up again. So yeah, that would be my advice. All right, not a problem. Thank you for joining. Take care, everyone. You will have had the exam kit sent to you with the study books. You should have done anyway. So have you got the AMAC study textbook? Yes, level 4's changing. It is changing. I'll come back to that in a second. Oh, right. Okay. Still waiting for your books. When did you join the course? What date did you join? They sort of say to allow sort of 2 weeks, up to 2 weeks. Not a problem. Thank you. Yeah, you should get the books very, very quickly. If you don't get them by Friday, just give our customer support team a call. Let me just type the number in. Yeah, just give them a call. You should get the books. You won't get notification that they're going to be delivered because they're just coming straight from Kaplan. And they'll want to leave them in a safe place. So yes, regarding level 4, I know one of our other students who's finished it now mentioned this to me yesterday. They're not stopping level 4 qualifications. I understand the email wasn't particularly clear. So qualifications 22, let me grab my list. In fact, it's next to me. Qualifications 22, which is what you're doing now. The last exam for that will be the 31st of July 2028. Okay, so you have got loads of time. You've got no reason to still be doing exams in 2028 anyway. You know, you're going to get them done. You should be getting it done this year. Yes, exactly. But if you're brand new, you get 18 months of course access. So that will then push into next year. But the last date for exams is July 28. The new qualifications are going to launch September this year. And yes, there are changes, but level 4 is still going to carry on. It's just a different structure and approach to what they're doing. So the last date students can register for this version with AAT is 31st of August this year. So after that point, 1st of September and onwards, all students will be pushed on to the new version. Okay, so yeah, don't worry. You are absolutely fine. You've got loads of time to get it done. So yeah, don't worry at all. And like I said, you know, if you've just joined, yes, you're going to get 18 months course access with us. Yeah, that's more than enough time to get it done anyway. So yeah, but at least, you know, if you did run over for whatever reason, you've got plenty of time there to get it done. Okay, but yes, you'll be fine. You'll be fine. So yeah, don't worry. Don't worry. Okay, so hopefully that's helped anyway. Okay then, right, I'm going to stop the recording. I always leave it ticking over because sometimes people watching this back, it helps other people listening to all these questions. So I'll stop the recording there and I will see you online next Friday.